An emergency update for everyone holding altcoins. There is a lot of panic in the crypto market right now because we've just seen $1.1 trillion evaporate from the stock market, leaving most of crypto down today. But come a little bit closer. What if I told you this panic and crash might actually be a good thing? Well, once you realize what may come soon, you may look back at today as nothing more than a good buying opportunity. Let me explain. There are two main reasons why we saw this crash in the stock market and obviously in crypto as well. One of those was the modification of the reciprocal tariffs Trump has imposed now in a whole bunch of different countries. You can see the stock market has had the largest two-day crash since back here when these tariffs were first put in place in April. And obviously, as you can see here, Bitcoin and ETH have taken a lot of the damage, but of course, altcoins, as they normally do, suffer the most in these volatile moments. But I do want to just take your attention to this 26.5-year S&P cycle that I did bring up many videos ago. And as a matter of fact, these red candles aren't that uncommon when we break out to new all-time highs. We're likely in the blow-off top moment of the 26.5-year cycle that's been raging on since the 2000s. And you can see here we've had this massive weekly red candle. But again, this has come about the same moment, or roughly, to when we blew out of the previous high over here. This is back in the last blow-off top, back in the 2000s, and you can see again the same pattern actually plays out. We do have a lot of volatility once we initially break out here. You can see the same thing even back here in the 1970s, right? We broke out from that previous high over here, and then we again kind of like used that previous high as support until we finally broke up to the blow-off top moment. Even as far back into the 1940s, you can see once we break that all-time high, okay, we kind of pretty much come back down and touch it at some point or another. So as a matter of fact, this crash we're experiencing right now, or a dip, whatever you want to call it, isn't out of the ordinary, and actually it's going along with the cycles that have played out in the past. It wouldn't surprise me if we reclaimed 6,150 before moving up again. We may even trend along that point depending on what comes next. Now, what could come next might actually be a good thing, even though right now it's a bad thing, which is the second point I want to make being that the non-farm payrolls came in as cooler than expected. The anticipation was we added 110,000 new payrolls or jobs to the US economy. It came in a bit cooler at 73,000. You can see here the net result was negative, and this comes on the back of two previous net negatives months, being May and also June. We also did have a slight uptick as well in the unemployment rate in here in white from 4.1 to 4.2%. Powell has mentioned that he would cut rates if we did see a sharp rise in the unemployment rate. Now we're far along from that actually happening, but you can of course see the inverse correlation here with the US interest rates in yellow. When we have a massive spike in the unemployment rate in white, rates drop to pretty much nothing straight away, depending on how high that sort of increases. So while the non-farmer payroll and the unemployment rate look negative now, and the market's obviously reacting to that, this may give a good reason for the Fed to begin cutting rates, so long as, of course, it's a soft landing and not a hard landing. The report significantly pushed up the expectations the Fed will cut interest rates in its September meeting. You can see here there's an 80% chance they cut by 25 basis points, and we kind of already knew this was coming. We had heard from Powell himself that he wasn't looking to cut rates in May, June, July, even August. Okay, September was the date to make any changes in the summer months because he was looking at the tariffs and how the tariffs impacted the economy. So what does this mean? This just simply means that while the markets negatively reacted to this negative news, because it is pretty much showing the economy, right, the employment is slowing down. What actually it means is there is a higher probability now the Fed looks to start cutting rates because of this. So it's kind of like a double-edged sword. It's bad short term, but it could lead to much higher asset prices in the long term, depending on what the Fed does next. And actually a really good way we can assess this is the business cycle. You can see here, this is the US business cycle. It's pretty much a gauge in how the businesses, the top businesses in the United States are doing. If these businesses are doing really well, this will actually go above this midpoint here of 50 into what's called expansion. And that you can see by these green bars is actually alt season. I can toggle alt season here, and you can see we have spikes, all right, in altcoins, okay, at that moment. Because again, if people have more money, they're going to spend that money. They'll first spend it in the economy, which is the white line. Then they'll spend it are altcoins, right? But if it's beneath this line, that means it's contraction, which means people aren't spending money. Therefore, businesses are noting that things are slowing down. They're contracting. So that's where we are right now. We're actually in contraction. But as you can see, we aren't just in contraction. We actually have contracted even further over this last month. Now, there is a silver lining to all of this because there is a way we can forecast when this will likely begin to climb back above the midpoint into expansion. And that's with one of the 5 components that make up this PMI index. And that is the most important one, which is the new orders. And it actually increased its index score from 46 to 47 over the last month, which is still beneath 50. So it's contraction, but it is a step in the right direction. Now, usually this is a lead. This is a forecast into what might come next, because as you might imagine, new orders is future orders that are being placed in each company for the next month or for, again, future products. But as you can see, they even mentioned this in the ISM report. Overall, new orders continue to slow amid tariff uncertainty. Which party will pay tariff costs is still the prime issue in negotiations between buyers and sellers. This is a clue into the future growth. I believe once we have tariff certainty, not necessarily tariffs are all square and fair, but that it's certain, then I believe this will begin to climb as the companies know who is taking on the cost. Either they're taking on the cost and they can prepare for that, or that's offloaded to the consumer and the consumer knows they're paying more, or that goes into the supply chain and the supply chain company knows they're paying the cost. This just simply means that we are going to hopefully have soon after a rise in altcoins. Altcoins should then go up as the business cycle increases. But if you want to make sure you're up to date on everything to do with macro, covering interest rates, what all of that even means, and much more, go subscribe to No BS Macro. Frankie is one of our macro experts we have also in the private community, and he is bringing you weekly and eventually daily content here on this sort of stuff when it matters. He's the expert, so I'll leave it up to him to keep you guys informed. So make sure you are subscribed. I will leave the link down below. But ultimately, I'm not really panicked right now, and I want to explain to you the reasons why, and hopefully if you agree with me, then it can calm your nerves as well. First of all, if we have a look at Bitcoin's price, it is respecting the yellow line. This is the 50-day moving average. It's very important. This is one of the tools I like to use here to assess whether this bull run is in a good spot or not, because if we see Bitcoin's price break down from the yellow, orange, red, and then very importantly, the blue line, okay, so it does this, that's chances are the bull run's over. But when it's in these massive continuous moves to the upside, like you can see it's been in here since the April tariff lows, like it was over here, and like it was over here, it likes to respect the yellow line. So you can see it doing it yet again. It's respecting it. It wants to stay in this bullish uptrend. So this is actually good. It is fine to have these downswings, upswings, downswings, so long as we respect the yellow line. And I think at worst, respect the orange line as well. Now, it's so important to have an understanding of like the Bitcoin and crypto cycles when you are investing, because this allows you to be calm when everyone else is really panicking, right, or scared. And so that's why a chart like this, Bitcoin to gold, is so important in my opinion. So to cut a long story short, this just shows you that we have, albeit a little bit longer each time, the exact same patterns as back in the 2019 to 2021 bull run. So back over here, the exact same patterns are playing out. Like, it's crazy, okay? And I've even mapped out again the time frames. We're just experiencing these time frames here a little bit longer, but again, it's all very similar. You can see back over here from the high before the pandemic crash, it was 252 days until Bitcoin broke up, okay, into full true alt season, I guess you can say. And this time around, I expect it to be around that, but since we've been, prolonging in every single one of these little events, I expect it to be like at least 252 days, maybe a bit longer. So around the 25th of August, maybe even in November, before we see Bitcoin's price break back above this point over here. And then hopefully that is the reason to cause alt season. Okay. So again, like the same patterns are playing out. If you watch a video I made like a few weeks back, you would have heard me say, we're in this point in yellow over here as we were back down over here, and that we could have seen a rise out of this little square and then a potential chance to come back down, I guess, into it, or at least using it as support, if you will, kind of like this. The exact same playbook as back over here. We kind of broke out of this, come up, and then back down again before rising. Not to mention the pool multiple, which is this chart down here that assesses miner revenue. This blue line essentially says how much a miner is making today on the Bitcoin network versus the last 12 months. That's how this line is really formed. And to cut a long story short, if you have a look at each and every single cycle, this black line, this middle point here, that gets touched halfway through each cycle, I've drawn a little red circle around it. This is essentially where we kind of have the midpoint in each and every single cycle. You can see here on Bitcoin's price in the top over here, right? So we have this kind of like touch in this red point. Now, it's interesting because from this red point, okay, being the center, we typically have a lengthening cycle. So again, back here in 2012, we had 427 days from that point until the very top of the cycle. That gave us almost a 100x on Bitcoin's price. We fast forward to the next touch over here in June 2016. It took 547 days from that point to the all-time high, giving us around a 25x on Bitcoin's price. Fast forward to this midpoint over here in July of 2019, it took 861 days to reach Bitcoin's all-time high. We saw just under a 6x. And now, in around March of 2024, we also saw a touch on this black line here. And if we just go out 861 days like the previous cycle, that'll take us to an all-time high of around July 2026. That's if we match. As you can see, the cycles are lengthening, so it's really hard to tell exactly when this will actually end, and that's why looking into those charts are important, because they at least tell us that, as a matter of fact, unless this cycle's way different and we actually just have a premature bear market, things are on track. It's just that maybe we got into altcoins a little bit too early, and unfortunately, we don't have macro conditions just yet. I think when we start cutting rates here, it'll be much better, but we don't have macro conditions just yet favorable for people in the economy, regular old folks, to jump into altcoins, because right now, as we know, people aren't spending money in the economy, okay? Jobs right now aren't crazy abundant, from it seems. And that means ultimately the business cycle won't go up. But more importantly, we're not going to have people diving into the very end of the risk curve, which is where we have our money at, altcoins, the furthest point and the absolute riskiest position you can be as an investor. But a chart like this does cool my nerves, and it may cool your nerves as well. This is Bitcoin to gold up here, kind of like the chart I showed you earlier on. It's this chart here, just in a different lens. And beneath it is Ethereum to gold. And I love these charts because they really do tell you a story that, Bitcoin to USD or ETH to USD can't tell. Essentially, you can see that we have kind of like the same patterns playing out every single time, where we kind of touch these lows, okay, from the pandemic. Also, we retouch this low here from the tariffs. And we can also see a high, lower high, high, lower high. Then once you break up through this trend here, we kind of have this massive initial push in ETH. And that kind of moment there is where we see Bitcoin go sideways. You can see here kind of like this pump and then retrace, kind of like what I showed you guys before. And again, that could be playing out here again shortly, whilst ETH does its thing and hopefully breaks out from this bear market trend. But ultimately speaking, it looks very similar. This is just zoomed in for you a bit better here. This is back in 2019 for ETH. You can see again, we consolidate around this trend here, and then we exploded. If I go into where we are right now, you can see a very similar thing. We're actually in the blue box, okay? So we're kind of like trending around here at the moment. Actually, a daily time frame might be a little bit better to visualize this. So you can see us sitting here. I do expect us to have some turbulence soon along this point in time. And jumping back here in 2019 for the daily time frame, you can see a very similar thing as well. Chop in yellow, chop in blue, chop in red before going up. So that's what I expect to happen here, likely sometime soon. It's also no doubt that we did have trouble here trying to break through this point. It's not only a trend line here, a multi-year trend line based on this diagonal line, but also this horizontal line here, which we've failed to break through about 5 or 6 times, you can see. So once we do break through it, I think that will cause alt season, and that's going to come very quickly because you can see it's a multi-year, multi-cycle level of resistance. Now, when alt season is the question, I think, guys, things are actually playing out here perfectly. If you have a look at the path to alt season chart, you'll notice phase 1 is Bitcoin. Bitcoin goes up a lot. Then phase 2 is Ethereum, and then phase 3 and so on from there is alt season. And this chart here does the best representation of that phase 2 to phase 3 period, where this is looking at altcoins versus Ethereum. we kind of go in these channels here for the whole bear market to bull market period, like we did back from 2018 all the way through to 2020, where we got this breakdown from this. This means that ETH had strength over altcoins right here, and the same things happened again recently. If I actually zoom in and have a look at this and dissect it for you very briefly, this is back here in the 2020 bull run. We again saw a breakdown here of this ascending channel, and ETH gained strength. It wasn't until the very bottom of this breakdown where we saw Bitcoin dominance topping, ETH at all-time highs. Then we saw others hit the all-time high soon as well. You can see I drew this line a few weeks back now, and it's again playing out pretty perfectly. I don't know how far down we will fall. It could be the same as previous, and we may fall around 30% or so. Okay, that could happen. Or it might not be as hectic, but I do think it does depend on ETH here in purple breaking this dotted line and this white line, which is pretty much its level of resistance at the all-time high, and again, that sticking point I showed you guys earlier on. This is others down here. This is altcoins market cap, and you can see a very similar thing as well. We've got a pretty strong level of resistance up here, but we are in an ascending triangle pattern, which is a bullish pattern for altcoins. So it's just squeezing and squeezing. The closer it squeezes, I think the better. So honestly, I do think we are in a pretty good spot. Once we see ETH in between these two lines here, I think we'll see alts around here. Once ETH fully cracks the all-time high, I think alts will soon crack that all-time high as well. Fear and greed has fallen back down to a 55 out of 100, which is actually a good thing. I know it's like killing us right now, and I know it's like, you have a look at altcoins chart here, it's like we're pretty much back down to similar prices as back in 2024, even in some cases 2023. It's disheartening for those like myself who've been in this whole time. Portfolio's still down like my own, likely. And it's just a waiting game at this point, I do think. I really do truly believe in my heart of hearts that we will have an alt season here. And I do think this waiting period will cull the weak hands, as they say, and let those who are patient like the previous cycle win. And this is just simply the art of animal spirits. We can see here, phase one, people are emotionally beaten. I do think we are just out of phase one right now into phase two, where we kind of are in disbelief. Most people don't believe we're going to have an alt season, but it's kind of in the air. And I don't think we kind of go into phase three, which is complete FOMO, until we break the all-time highs, and it comes soon after. But this is all just my opinion. Like, I strongly do believe the market will go higher from here. That's why I am personally hedging myself. If you have a look, if you're in the private community, you can see my portfolio, my exit levels. You can see everything transparently. I'm hedging into this actually happening, okay? And so obviously, in your case, maybe you can't afford to risk as much money as you might have in the market right now. That's why I think you might need to take a step back. And if we do go higher, it'd be a smart idea to take off some of the risk, some of the money you put in the market that you might have been overexposed to now, and ensure that whatever you have in the market is money you can't afford to lose. Many people go too deep too quickly and have to kind of pull money out for the month's rent, because they've just gone too heavy, expecting next week's going to have a massive pump. So be careful, and ultimately, I wish you all the best for this cycle, guys. I'll keep you informed. If you've made it this far, you can do me a huge solid by hitting that like down below. Make sure you are subscribed, and I'll see you guys tomorrow. Take good care of yourselves. Bye-bye.